Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Nurix Therapeutics, Inc. annual report. Nurix Therapeutics, Inc. is a clinical-stage biopharmaceutical company that specializes in the development of innovative therapies for various diseases. The company's pipeline includes several promising candidates that have shown potential in treating cancer, inflammatory conditions, and other diseases. The company's portfolio consists of small molecule and antibody therapies, including NX-5948, an orally bioavailable BTK degrader, which is currently in phase 1 billion/2 clinical trials for the treatment of relapsed or refractory B-cell malignancies and autoimmune diseases. Another key candidate is NX-2127, a BTK degrader that is being tested in phase 1A clinical trials for the same indications. In addition to these candidates, Nurix Therapeutics is also developing NX-1607, an orally bioavailable Casitas B lineage lymphoma proto-oncogene B, CBLB, inhibitor, which is being evaluated in phase 1A clinical trials for immuno-oncology indications. Furthermore, the company is working on NX-479/GS6791, a IRA-K4 degrader that has shown promise in treating rheumatoid arthritis and other inflammatory diseases. The company's strategic collaborations with major pharmaceutical companies such as Gilead Sciences, Sanofi, and Pfizer will likely accelerate the development and commercialization of its drug candidates. With a strong pipeline and partnerships in place, Nurix Therapeutics is well-positioned to make significant contributions to the field of biopharmaceuticals. The list of businesses and services provided by Nurix Therapeutics includes discovery and development of small molecule and antibody therapies, clinical trials for cancer, inflammatory conditions, and other diseases, commercialization of innovative therapies, strategic collaborations with major pharmaceutical companies, research and development of IRA-K4 degraders for rheumatoid arthritis and other inflammatory diseases. The stock price of Nurix Therapeutics, Inc. NRIX, has experienced a significant decline in the past year due to various factors. One major contributor to this decline is the reduction of target prices by analysts. On October 10, 2025, Piper Sandler reduced their target price on NRIX from $35 to $32, resulting in a stock price drop of approximately -11.3%. This analyst rating change had a direct and significant impact on the company's stock price. In addition to the analyst rating change, other insider selling activities also contributed to the negative market sentiment around this period. On November 3, 2025, CFO Hout Hans Van sold shares, while on October 30, 2025, insider Gwen Hansen also sold shares. However, these events were not as directly correlated with the significant stock price drops as the analyst rating change. The reduction of target prices by analysts and subsequent insider selling activities have likely contributed to the decline in NRIX's stock price over the past year. These factors have created a negative market sentiment, leading to a decrease in investor confidence and ultimately resulting in a drop in the company's stock value. Nurix Therapeutics, Inc. maintains a market capitalization of $2 billion, broadly in line with the industry peer group. Nurix Therapeutics, Inc. trades at a higher price-to-book ratio of 3.69 times relative within the industry. But when we look at the broader industry, much for its peers are also priced fairly or higher. This indicates an overall sector-level optimism, suggesting that most investors have already participated in the industry, leaving limited opportunity to uncover undervalued stocks. The balance sheet appears very conservative, with liabilities representing only 21% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. Net income experienced a significant decline from $193.6 million in 2024 to $264.5 million in 2025, although the exact reason for this decrease is unclear. However, it's worth noting that there were instances where no change was reported, and uncertainty surrounding potential regulatory changes and government actions also contributed to the ambiguity. Profit margins were not applicable due to a lack of revenue from product sales. Nevertheless, several factors could potentially impact profit margins in the future. These include dependence on others for manufacturing, supply chain disruptions, delays in clinical trials and commercialization, increased regulations, price controls, reduced reimbursement levels, excise tax on certain stock repurchases, and limitations on NOL utilization. The decline in net income can be attributed to the TCJA tax reform, which had a negative impact. Furthermore, profit margins are expected to be negatively affected by various factors, including increased regulations and reduced reimbursement levels. These changes highlight the complexities and challenges faced by companies in navigating regulatory environments and adapting to shifting market conditions. The company's financial performance indicates a positive trend in its operating cash flow. Despite using $249 million in operating activities, the net increase in cash and equivalents was a significant $137 million. This suggests that while the company is investing heavily in its operations, it is also generating sufficient revenue to cover these costs and maintain a healthy cash position. Overall, this indicates that the company is managing its finances effectively and generating positive operating cash flow. The performance of various segments and regions in the market has been a subject of interest for many stakeholders. Among the regions that performed well, the UK market stands out as a notable exception. This region's success can be attributed to favorable market conditions. On the other hand, several regions have struggled with poor performance. The EU market has faced significant challenges due to strict price controls, which have hindered growth and profitability. Similarly, the US market is facing potential risks and challenges stemming from regulatory changes that may impact business operations. Furthermore, international markets are also experiencing increased pricing pressures or regulatory changes, posing a threat to their performance. These regions require careful monitoring and strategic planning to mitigate these risks and ensure long-term success. Management's discussions in the annual report reveal a cautious outlook for the company. The uncertainty in business, politics, and economy poses significant risks to the company's operations. Furthermore, the lack of approved products for commercial sale means that revenue from product sales is unlikely in the near future. The company also expects fluctuations in collaboration revenue due to varying payment timing and amounts. Additionally, research and development expenses are expected to increase, as well as general and administrative expenses, driven by infrastructure improvements and public company compliance costs. A major concern is the uncertainty surrounding deferred tax assets, resulting in a full valuation allowance. This highlights the potential risks associated with the company's financial position. To support operations and pursue its long-term business plan, the company anticipates needing substantial additional funding beyond its existing cash reserves, which are expected to last at least 12 months. Overall, management's discussions convey a sense of caution and uncertainty about the company's future prospects, emphasizing the need for careful planning and resource allocation to navigate these challenges. Acquisitions and divestitures are significant business transactions that can impact a company's financials and operations. However, based on the extracted summaries, it appears that there were no explicit acquisitions mentioned in most pages of the document. One potential acquisition was mentioned on page 140, but it was actually a divestiture. Nurix Therapeutics, Inc. was dissolved in November 2023, indicating that the company had been sold or spun off. On the other hand, there were some divestitures and sales of common stock mentioned in the document. On page 104, it is noted that there were two sales of common stock. One in April 2024 involving 11,916,667 shares, and another in October 2025 involving 24,485,799 shares. These transactions can be considered as divestitures or sales of company assets. In summary, while there were no explicit acquisitions mentioned, there were some divestitures and sales of common stock that impacted the company's financials. The company's financial strategy has been focused on retaining earnings rather than distributing them to shareholders. Despite having the opportunity to pay dividends, the company has chosen not to do so, instead opting to reinvest its profits in the business. However, the company has also utilized stock option exercises as a means of returning value to shareholders. Through this method, existing shares have been repurchased by the company, effectively reducing the number of outstanding shares and increasing the ownership percentage of remaining shareholders. Concerns about inventory buildup do not appear to be a significant issue. However, there are several factors that could lead to supply chain disruptions. Minor deviations from normal manufacturing processes can result in reduced production yields and product defects, potentially disrupting the supply of products. Changes in government policies, political unrest, or unstable economic conditions in China may also impact the supply of goods. Furthermore, the UK's exit from the EU and potential divergence in regulatory requirements could lead to supply chain disruptions. Additionally, macroeconomic conditions may cause suppliers to experience disruption to their respective supply chains. These factors highlight the potential risks associated with supply chain disruptions. That concludes the financial summary for Nurix Therapeutics, Inc. Feel free to comment below, and I will be happy to answer them when possible.